Josh, I'll start with kind of like I think where all the conversations around JWB and real estate investing start. What's your why when it comes to investing? Like what made you want to take this like not so traveled path of becoming a rental property investor?
Well, if you don't mind, I'll start kind of with just like investing in general because it quickly transitioned into real estate. But
Cool.
basically, in the beginning, man, like I'll never forget a moment. I was 20 years old and I was newly married, and I had a cell phone bill that was duly late, and I remember about to go to work, and I remember trying to make a decision as to whether I could pay my cell phone bill, and if I did, would that leave me enough cash for gas to get to work? And so. Man, I at that point in my life, I just realized, like this isn't okay. Basically my why became I don't want the lack of money to keep me from being the best version of me. I realized very quickly that I was working really hard for my money, but money wasn't working hard for me. And I saw like a brokenness, not just in just the stress and everything I'd gone through for 1 year, but doing it for 20 plus years, right? And I mean, physically, mentally, I finally bought my first turnkey property in University Heights, Ohio. And I owned it for around 10 years. And yeah, it was not a great experience. I had some years of appreciation, but I had really poor execution, I would say, on the property management side. It ended up being something I bought to be passive, and it wasn't passive. It ended up being a headache. I had that experience, that going in the background, like I learned some big lessons in like the trading journey that I had. And I think the most valuable one was just I found what makes a good investor, what made me a good investor at that phase of my life, what caused me to have the opportunity for the wins and end up having some of the wins
Mhm.
was really not about, man, I can do perfect technical analysis, I can do perfect fundamental analysis. Like it wasn't, it wasn't all that. It was really understanding like human emotion and human nature,
Mhm.
and more importantly, my human emotion, my human nature, the way I responded to volatility, right? And so that was a big lesson I learned along the way. But 2022 had some really big wins in crypto and did exactly what I basically agreed with myself I would do. One of the things I learned in that group, which was really valuable, was number one, like there are no guarantees. And anybody that tells you there's a guarantee run, But, what I learned to trade based on was possibilities and probabilities. So every single trade or investment that I weigh, right, it's like possibilities and probabilities are what drive the decision, right? And so that's can be a little bit subjective, right? But there's also a lot of data, which is what, Greg commonly talks about, right? That can largely help you determine the possibilities and the probabilities, right?
Yeah.
But the second most valuable thing that I learned, or maybe the most, was I learned to frame every decision that I made financially around the minimization of regret. That's something that the mentor that I had taught me, and it kind of blew me away because it really did reframe every decision that I made, right?
Mm.
And this goes back to the personal finances personal, right? It's like
Yeah.
every decision that I made, if I was in the middle of this trade and I was trying to determine, um, if I sell here and I know what I think I know, and I think the probabilities there's a lot of room left in this market for it to go, and I sell
Mhm.
today, will I regret more, you know, missing out and watching that appreciate the way I think it could, or would
Mhm.
I regret more if I don't sell and it rolls
Yeah.
over,
Yeah.
right? So it's kind of it's a very valuable tool, I think, as an investor to analyze your decisions, right? So I ended up waking up one morning and just at that point I realized I would regret, right, the amount of money that was sitting there, and
Mhm.
not extracting that from that kind of high risk volatile thing because I knew like it could just be gone tomorrow. It could be half tomorrow. It could be like that was the world I was living in.
Yeah.
And so I eventually cashed it out. And because of the experience that I had with the rental property I had, I started looking for advice. I still wanted real estate, right? Like
Yeah.
all the attributes that I wanted coming out of this highly volatile, high risk asset, I wanted away from. And I wanted basically what I considered the opposite, right? Which was like a real tangible asset, serving a real purpose, real ground, real home, and something that has a really consistent history of just appreciation being, inflation adjusted, right? It was basically exactly what I wanted as a base coming from that craziness. So I was part of the Fortune Builders group and they put me in touch with JWB. The interactions I had with JWB were what ended up ultimately leading me to make the purchase with them.
So let's go into your portfolio. This is your success story. These are numbers based on actual results, right? Like this is not a financial projection or anything like that. This is informational purposes only. Everything has risk here. But this is what you've been through, right? You bought 5 properties in 2022 with JWB. Looks like you bought two in January, one in February, one in April, one in May. Is there a reason that you bought 5? Did you have a number in mind of properties? Was it just kind of like I have this much pile of cash and I can afford 3, but if I stretch, I go to 5? Like what was the reasoning around acquiring 5 in like this short amount of time?
Yeah, I think I will say I planned on buying two originally, the two I bought in January. But as I kind of read the market, I thought a lot more about, I guess, for me, another big like thing that I learned in investing and just life in general, right, is everything is relative, right? And
Hmm.
so the problem, I was sitting there and I was going to buy two properties and I knew long term I wanted way more, right? That was something that I knew.
Hmm.
But I also, because of the poor experience I had in Ohio, my thought was, dip my toes in, with a couple properties and see if this is better. But I was so confident after, interfacing, exchanging, and dealing with JWB a little bit. And I had a few months there that I started to just look at things again through the realm of like relativity. And I'm just like, what ended up being was I don't see anywhere better to put my money, right?
Hmm.
That's ultimately what it came down to. Is like I know long term my goal is to have many, many more of these properties. One thing I love about real estate, what always attracted to me is it's the thing that produces income the most similarly to how I budget, let's say, right? I budget on a monthly basis, right?
Yeah.
So it's
Yeah.
like for me, when I'm thinking of the future, I'm thinking of a passive portfolio and I'm thinking of generating income to live off.
Hmm.
It's just it works really well, right? I budget on a monthly basis. I need this much money to live every month, and every month I get paid rent. And so I knew I wanted more rentals ultimately long term, but I think just in that moment of time when I think this is kind of a unique moment of time in that I think we have historically low interest rates, and I think they're going to probably go up quickly. And I looked at, what interest rates rising means for equities and everything else, bonds,
Yeah.
and I just kind of looked at the situation and I said, I don't see anywhere better basically for it. So let's just go ahead and accelerate these other purchases. And that's how I came to it.
Interesting. I want to just kind of like hit on, we talked about your initial investment. You said you timed the market pretty well, right? Like you've done really well, right? Like this is a really, really good kind of you got in. This is 4 years worth of returns, right? Like a
Yeah.
16.3% IRR, a total profit of, a third of $1 million here, like 333,000. You have pretty decent, like rental income here. You've got obviously great home price appreciation, tax savings, and all the good stuff. And you've got like the quintessential Pac-Man happening for you, right? Like your your home price appreciation is this like big piece of the pie, even as interest rates went up and all these different things happened. You've got a
Yeah.
decent amount of net rental income, right? Like it's like the quintessential Pac-Man that we go through that over 4 years has really worked for you. And we were just talking that you're now in the property baby phase of refinancing and getting more properties, right?
I am. Yeah. So I just actually completed 5 refis. So I refied all of them. It was a little bit of a difficult decision, I will say, primarily because of the interest rates.
Hmm.
I was
Yeah.
flipping some interest rates higher. But yeah, I did a lot of analysis kind of just, man, over 5, 10, 15 years. And for me, again, in my personal situation, to be honest, like several $100s or even $1,000 of cash flow a month is negligible. Like I'm still working, have a good income, right? So for
Hmm.
me, when I looked at my circumstance and what the real estate play was for me, it was ultimately I know several things. I know number one, ultimately before I quote unquote retire or just want passive income off these. I want more of them, right? And that's years down the road that I plan to ever need that per se. So any way that I ran the math, right? Like to me in my current life state, the cash flow was negligible, basically, whether I would refi, whether it was several interest point rates. So I ran out a bunch of scenarios, and ultimately 10, 15 years from now, it was millions of dollars of difference, right, of refinancing. And of course, there's some assumptions built into that, of course, like, appreciation. But I built a bear case, I built a base case, I built a bull case, right? And no matter how I looked at it, right, like with my goals, it got me there sooner by having more properties. And I realized for me,
Mhm.
it's not a cash flow play at this stage of my life.
Yeah.
And so it really is appreciation with leverage, right? Like that's what the play is. So you can see 16, 17% rate of return, at the leverage ratio that I'm at. That's, if we get some historical appreciation, like that's something that's very feasible over the next 10 to 15 years and probable in my mind, right?
Can you talk me through kind of like the numbers you were actually looking at?
Yeah, I did go with Brandon through, my portfolio, and so I got the JWB presentation. My basis was very similar.
Hmm.
What I ended up doing is just I spent an evening with Anthropic Claude,
Yeah.
and I just kind of ran a bunch of scenarios, man. And I actually I had like the basis for from JWB for was property management cost and maintenance and vacancy and all these things. But I actually went back and I took my exact portfolio for the last 4 years or so, and I kind of came up with my own numbers, input them, and then I ran a bunch of scenarios. And my ultimate decision was with the portfolio that I have there, 15 years, like to kind of give an idea, it was roughly, if I would have not refied 15 years from now, the projection was I'd probably have somewhere around $60,000 a year of cash flow just from those
Hmm.
five properties, right? But the actual net value of net worth of actual equity
Hmm.
versus doing basically a serial refinancing where I'm every 5 or 6 years over the 15 years, assuming the equity's there, basically rolling, snowballing the properties, it ended up being about double literally the value. So it went from about $2 million of net worth in real estate over 15
Hmm.
years to four.
Hmm.
And that was like at a base case. And even with a bear case where we had like 2 to 3% appreciation, right,
Yeah.
on the leverage portfolio, it was a million, So again, even if my goal was at that point to be income producing, flipping those properties and selling and buying as many as I could to just be purely cash flowing, right? No matter what way I looked at it, knowing that in my near horizon, like that cash flow is not going to be life changing, it's not necessary, right? For me, it was just about accelerating the accumulation phase, right? And ultimately what got me more in 10 or 15 years. So
Yeah.
yeah, that was really my decision making process was what do I want to trade basically $2 million in equity in 15 years for $60,000 a year of income. And that was literally what it came down to. That's what the decision on paper was in front of me. Like what I think will happen 15 years from now, if I frame it through the lens I always frame things through, it's like 15 years from now, if things go the way I think they will, I'll regret not making that decision. Like
Yeah.
that's what it
Yeah.
is.
There you go. There you go. Like making it not lack of regret, right? Like not
Hmm.
wanting to regret a decision of not making a decision. I love that, man. That's cool.